Yo, what's good, my OTE traders? This video is going to break down the exact strategy I used to make 6K in payouts in 1 month. Let's jump straight into it. So, starting off on the 4-hour time frame, I'll jump on the charts first thing, and I'll look just heavily at the 4-hour time frame. What PD arrays are being respected, are making higher highs and higher lows. So, what can we see here then? We can see we have this sell side liquidity has been swept. Then we formed this range here and got a pullback into the 0.705 level. So we got that pullback into that 0.705 level. Then we get this push up here. So I'm heavy bullish on the day. So here we have a 4-hour high. This will be our drawn liquidity. We also have this 4-hour high just resting here. This will also be our drawn liquidity. So down here, we've had this bearish liquidity sweep, sell side liquidity sweep, sorry. So here's our sell side liquidity sweep. It's been swept. Then we just consolidate for a bit. Then we get a nice push up here after sweeping all this trend line liquidity here. So we have all this trend line liquidity. This comes down and sweeps it all. So then what I'll do then is I will jump on the 15-minute time frame. So I will go from the 4-hour to the 15-minute time frame. What I'll do in this time frame then is this is where I will get my OTE levels and my standard deviation levels. So standard deviation levels, how do we correctly mark them? Like how do we correctly anchor them? So everybody has different ways. So for me personally, sweep, close back inside the range, giving us a nice CISD as well. So CISD after the sweep. Let's make this red for this example. So sweep, CISD. Then from this high to this low, from this low to this high, and from this high to this low, this is the low that created this high that took out buy side. Once we take out buy side, price reverses and gives us a nice change in state of delivery then. Okay, so from this high to this low is your manipulation leg, but because we're heavily bullish, we're just looking for the pullback into somewhere around here, and then we'll look for longs. So we're heavily bullish on the day, so I will just be looking for some major sell side liquidity to be swept. For example, here, this is a nice sell side liquidity target, and so is here. So we'll just watch price and see what price does once we get these sweeps. Okay, so for me, anchoring my standard deviation. So because we're heavily bullish, and if I was to mark from here to here with my standard deviation, I don't think we're going to get a pullback down to in and around here somewhere, or here, or even the -4 zones. Okay, so for me personally, in this example, what I would do then, because I'm only looking for a short pullback, we're heavily bullish. So what I would do then is I will anchor the fib from the highest candle body, and then I will go to the lowest candle body then. Okay, so this gives us our manipulation leg. Then if I drop down to the 5-minute time frame as well, you can see this low to this high swept there. Then we get this big impulse of bearish candles, leaving us this bearish fair value gap as well. The price is respecting. Okay, so jump back up to the 15-minute time frame. Okay, so now we've got our standard deviation levels correctly marked. We've got them anchored. What do we do then? So we look at current price. Okay, we get this range here. Okay, so this gives us a range, but what stands out to me here and why I wouldn't use this range is because I'm so heavily bullish. You can see here we have this sell side liquidity sweep here. Okay, so consolidation, manipulation, distribution, so the power of 3 right there. What I will then do is this will be the low of my range. So from this low here to this high, so from the low to the high, that gives me my optimal trade entry range, my OTE levels. So looking at my OTE levels, what aligns? So the 0.79 level is aligning with this bullish for value gap here. Okay, so we have this bullish for value gap right here. That is also CE of it aligns with the 0.79 level. Then we also have a bullish for value gap that we're inside as well. Okay, that also aligns with 50% of the 0.79 level. Okay, so we're building up some nice confluences here on the 0.79 level. Okay, but because I'm so heavily bullish, I want to see major sell side get swept. Okay, so this at the 0.79 level, this low is going to be our sell side liquidity. Okay, so that's going to be our target that we want to see get taken before we look for any longs. Okay, so what I like about this zone here, let's just look at the 0.882 level. Okay, so it aligns nicely with the negative 2.25 level. So right now we have three confluences stacked. So we have a 15-minute bullish for value gap. We have the 0.882 level. We have the negative 2.25 level also aligning with that level. That unmitigated for value gap. We also have a bullish order block here aligning nicely with the 0.25 level. The 0.882 level as well. The reason I'm going to take this level for a long, and this is going to be the real sauce. Okay, so if I zoom right in here and you see the 0.882 level here, what is this? This right here, a candle with no wick. Let me just highlight that purple. Okay, so this is what we call a devil's mark. Okay, so that devil's mark is a strong drawn liquidity. Okay, so the fact that we have this unmitigated 15-minute bullish for value gap, we have the 0.882 level, we have the negative 2.25 level, and we also have a devil's mark resting on that 0.882 level as well. Okay, so that to me is going to be the perfect zone that I'm going to take for longs. So I will just set my limit here. I have a nice take profit just up there, or you could target the further 4-hour high there. But for this example, I'm just going to target this high here. Okay, then I will always have we'll just put it just below that for value gap there, the unmitigated for value gap. We'll just put it just below that for value gap there, just to give it a bit of breathing room. Okay, so if I go ahead and I set my buy limit here as well. So we've got our standard deviation levels, we've got our liquidity mapped out, we've got our higher time frame bias, we have got our OTE levels as well, and now we've aligned our higher time frame PD arrays with these levels as well. Okay, so this is a 15-minute time frame this trade is based off. So let's just play price and see what happens. So there we get worked in. Barely any points in drawdown. Big push up there in full TP. So that strategy right there, standard deviations aligned with OTE. Okay, then the real sauce right there, this is devil's mark. Okay, so if you ever see a devil's mark aligning with one of your OTE levels, never take a trade off the PD arrays as well. Maybe should have said this a bit earlier in the video, but yeah, you always take a trade off one of your OTE levels. Never choose the beginning of the fair value gap, the beginning of the order block. Always choose a level, and always make sure that level has plenty of stacked confluences. So yeah, that's just a quick simple video, explain the exact strategy I used to make over 6K in payouts in 1 month.